Good morning, this is Andrew from Trend Following Mentor, and today is the 22nd of January 2014. We're going to talk about, in this short video, about basically entry points or entry signals from 50-period exponential moving averages. I mean, they could be considered swing trades or pullbacks as far as trend following. And in markets that we're going through now, it gives you it depends. If you already have a position, it gives you a potential to add to your position. And if you don't have a position, again, you can initiate one. But again, there's no perfect. Entry signals are just part of the picture. Actually, they're the least important of it. Really, the key is thinking in terms of trading psychology, money management, risk management, and even more importantly than the entry is the exits. So what I always do, again, you take it day by day. Again, I'm not a bear, I'm not a bull. I try to weigh out the facts and see what's happening and follow the trend. That's really all I can do. And opinions really don't mean anything. My opinions, there's no gurus. So really the whole principle I'm trying to espouse to you is to do your own homework. So if we look at what's happening, like yesterday, it was pretty interesting. The NASDAQ hit a 13-year high, yet the Dow was down slightly. And then you had some Dow components that were down, let's say Verizon, Goldman Sachs, Travelers. Yet, you know, it's just there's times where the market, you can almost say, as much as there's this enthusiasm, it's not exactly clear. And you have the advanced decline line increasing, and IBM revenues have fallen, and you try to take it all into the picture. So as I see it right now, you have 13-year highs on the NASDAQ. That's great. So we're in this roaring bull market. That's the good news. The other good news is the AD line is increasing. But there's, you put everything out and weigh everything in its fair perspective. Also, one other major, like I have a line of demarcation. As long as my 10-period exponential moving average is above the 30, world's beautiful. And you can see it all of this period back from even October. It was above. Then you had a slight period below. But another interesting thing is we haven't had more than a 10% pullback for over a year and almost, I don't know, X number of months. It's something 440 days, something like that. So that's worrisome because it's always good to have a sell-off. On the negative side, what we see is there's still 5 distribution days. Whenever you have clusters of distribution days within a, let's say, monthly period, it's a negative, and the market can turn very quickly to the negative. You also have, right here, you have a divergence. You have higher highs here in the S&Ps. You have lower lows on the MACD. That's showing some weakness. That's not a positive. So anyway, when you're in this situation, I'll tell you how I'm trading. I look at, let's say, leading stocks, and I look to buy them when they're pulling back to 50-period exponential moving averages. It's a very simple rule. And again, there's nothing perfect with it. Entries really don't mean anything. And it all depends on where you put your stops also. Like this trade right here, depending on where you got in, you can argue to some degree it worked, or to some degree really hasn't gone anywhere. And this is Apple. Price line, contrarily, hit a 50-period exponential moving average here. It also had a nice little pullback. And then is moving up. I was in this trade, and because of this pullback to the 50, and then one of my rules, and again, you need to make your own rules that match your personality, is if the stock hasn't moved in 5 periods, 5 days, then I'm exiting. And I exited, and like in Murphy's Law, it started turning around. This is what trading is. There is absolutely nothing perfect. What you try to do is you try to put on low-risk bets, and I'll qualify what a low-risk bet is, where you risk a small percentage of your account size, hypothetically. If you have a $100,000 account, you might want to consider risking 1%. You might want to be considered, which is $1,000. You might consider risking $500 or 0.5%, because what will happen is you will have a series of trades in a row that will not work. Or let's say if you're going long and then the market starts turning, and you will have this series of trades which causes a drawdown. So you're always trying to think of the downside, not the upside. This, conversely, as I say, some trades work and some trades don't work. It worked a couple of ways. Here it pulled back to the 50, you can see, took off, and then gapped up. It was a nice trade. And then, lo and behold, here's another one. So far it's working. but also wasn't on the strongest volume. You want to see it like here. This is on very strong volume. That's a lot of conviction, a lot of buying. Chipolita? Well, depends on how you look at it. Had a pullback to here, took it out, and really hasn't gone anywhere. This is what the trades are. There is nothing perfect when you're trading. What you do, or what I suggest you do, again, this is no personal information to anyone, but have a routine. Follow the routine. My routine is always looking at the S&P 500 to see what's going on. And then look for setups. Understand that your greatest profits are going to be made coming out of a bull market, coming out of a bear market, okay, going long, or after a correction. I mean, we're into a bull market that, depending on how you look at it, could be considered very old, from March of 2009 or from the lows of 2011. They're both long periods, and especially if you look at 2009. So again, you have to have a trading plan, know exactly what you're doing, and this is the disclosure I have here, that past performance is not indicative of future performance. And really what I'm trying to do is just to educate. And you can read the full disclosure on the bottom of our website. And I've been getting more and more requests for mentoring and teaching. What I've done with numerous clients is I can do hourly consultations with you if you want one-on-one help to try to help you build your plan. Because I understand that $5,000 is a lot of money for people. And what I also do is the first half hour is free, just to make sure that we both determine that I can help you. And if I can't help you, then then there's no point of going forward. So again, this is Andrew from Trend Following Mentor. I trade for a living, and it's great for me that I can actually talk to all kinds of people from all over the world. I get emails, and it's just my kind of way of giving back. So if there's any way I can help you, just let me know. This is Trend Following Mentor. Thank you.